Hey guys, welcome back to another episode. Today we're going to take a quick look at Activision. The stock price is down 14% in the past 5 days, mainly after reporting earnings. So in today's episode, I want to take a quick look at the following: the good, the bad of earnings, share my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas. And I also have my free weekly newsletter where I share all my presentations of every stock I've been covering this week and in the past week or so. So, like I mentioned, today Activision, traded under the Nasdaq as ticker ATVI, is currently down about 14% in the past 5 days. Yesterday, the stock price wasn't down much, about 0.59. This was on Friday's day's closing, right? We can see most of the drop happened after the company reported earnings. Since earnings, the stock is down about 12.69. So let's jump into the overall presentation, right? So Activision, first, Q3 net bookings. And for those not familiar with gaming, net bookings is the revenue segment that they do. This was 1.88 million, and it was up 6% year over year. So this isn't bad, right? Same time last year, we saw a strong move in gaming. So for it to still be up 6% year over year, I think that's pretty impressive. Unfortunately, that barely met guidance. Another thing, they kind of saw 390 million monthly active users. This was kind of flat year over year, and it was down about 4.4% quarter over quarter. This is what you want to see. In all theory, the best case scenario is up year over year and also up quarter over quarter. But it seems right now people are probably playing less games as they have more things to do outside as lockdown eases or lockdown restrictions ease up. Guidance for net bookings, and I do believe this is one of the reasons we saw a nice steady decrease in stock price. Guidance for net bookings fell short from analysts and is going to be down year over year. They also said that in the upcoming year, they are going to see some game delays in some of their two popular titles. The new Diablo and the new Overwatch are not expected to contribute in 2022 anymore, and this is due to personnel leaving and internal interruptions. I think this is probably the biggest reason stock price is down. There's so much uncertainty right now with Activision, right? So if they can't keep talent in the company, is going to continue to affect game delays. The company is also implementing numerous changes for better work environment. We've seen Activision has been in the news lately. A lot of legal lawsuits upon the company. The companies said, "Hey, we're gonna work for a better future in a better gaming industry here in our Blizzard department. We are making some changes." Some of these changes can be tracked, right? Like they're looking for X amount of employees to be diversified, also in their overall board and stuff like that. So certain things could be tracked. At the end of the day, I do want to say Activision still has an overall strong franchise and games and still has a strong player base, right? So much has happened in Activision in form of negativity news, and for the company to still be flat year over year in monthly active users, it tells me that, hey, unfortunately, gamers don't really care the outside of what's happening with the company. Obviously, there's some gamers that do, but the overall majority are still willing to play the game. So they still have some strong franchise, they still have some strong games, and they still seem to have a strong player base. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. Now, some things to know, right? Numerous analysts have decreased their price targets or ratings for Activision. Here we can see Activision got downgraded to a hold from a buy. Here they kind of got their price target cut from $120 to $94. Still reiterated buy and add rating. This one was price target was decreased to 75 from 108, but still kept rating. This one was decreased to 98 from 125, but still kept rating. This one was decreased from 115 to 115 from 125, but still reiterated buy rating. So we can see overall, we did see a bit of some of them might have decreased rating. Most of them just decreased the price target from current prices. But we can see most of the price targets are still a little bit higher than where Activision is sitting at right now, $67.83. Some other things, they are coming up with a new game this quarter, and that's going to be Call of Duty, which released November 5th, which is expected to do really, really well. Obviously, there's a lot of competition. We know Battlefield is also released recently, so kind of competition there. Like I mentioned, right, I think this company has a lot to go through. Leadership and employee retention. If they keep leaving, if leadership keeps leaving and employees keep leaving, company can still see more delays, right? And I do believe this is the biggest impact from out of all of this, right? I do believe talent is an important note. Another thing that did worry me is Jen O'Neill. This is when kind of all this Blizzard lawsuit happened. The president of Blizzard kind of stepped down, and two people were kind of put up to take the place. One of them was Jen O'Neill, and this was just a few months. Jen has recently announced that they plan on leaving the company end of year. I think that's actually pretty insane to see this someone who just got stepped up or just kind of boosted up is planning on leaving end of year. I think that kind of shows some short-term negativity in the company itself. So right now, my overall thoughts: I do not own Activision. And like I mentioned, this is a company that has a lot to go through. But if they make it out well, if they continue to, if they're able to keep those talent retentions up, if leadership doesn't continue to leave, this is a company that I believe is at a great value right now. We can see forward EV to EBITDA ratio is about 12.47. And if I was to get into Activision, I still haven't decided. This would be a tier 2 based on where the company is at right now and based on valuation. So we can see I feel like a good portion of the risk has been eliminated, but there's still so much unknown or uncertainty happening. I also wanted to take a quick look at Activision compared to all its other peers and forward EV to EBITDA ratio. And this obviously is the cheapest. And in my opinion, I believe Activision has the strongest franchises out of all of them. Maybe not Grand Theft Auto, but World of Warcraft and Call of Duty are actually pretty strong. So maybe yes, right? So for me, out of all the gaming, this might be giving us a better buying opportunity, but there is a reason, right? All that added risk. So if you guys want this free presentation, it's free on my newsletter. Make sure to check it out. This was updated in November 6, 2021. Take care, guys. Have a good night and see you next time.